Hey everybody, DayTraderRockStar here. And for those who don't know me, I'm the host of Day Trading Radio. It's an online trading show that goes on the air every single day since 2007 from 8 a.m. Sometimes I like to get in there a little bit earlier to 4, and sometimes even overnight, like I'm doing this video right now. It's almost 11 o'clock, so I'm always watching the markets and what's been going on over here at Day Trading Radio. And I just want to make sure that everyone's doing well in this season of COVID. And we know that the markets have been super volatile recently over the last couple of months because of the fears and just everything. Inflation, there's so many different things that we could pinpoint, not to even mention the COVID and new variants and stuff. The market's been really all over the place. And it's hard to, make a clear-cut directional trade at this point. It can go both ways, and a lot of people are holding on. They're dealing with a lot of pain. Some people are trying to trade it, and you get chopped up. I've been holding off on trying not to get too deeply into swing trades, and I've been focusing more on intraday scalps of the MES. So this is what I really wanted to discuss and kind of bring the attention to this. This has been working out really good, and I want to focus more on it during our daily shows. So, this is kind of the announcement going out there that I will be focusing more on the futures trading, and I'm going to be doing a lot more education on it. I feel like I'm really tuned in on it. I've been trading it for years, and the setups are coming in really clean. The methodology is sound, and I love talking about it, so I want to continue to do more detailed videos on it and get people up to speed and make money. I have a feeling a lot of people are watching these trades and what I'm calling the markets, and we see, but they're not pulling the trigger. And I have that problem too. Sometimes you just can't pull the trigger, even though the setup is there and you're not sure. It's just because there's a lot of outside noise out there. The markets are not doing well. There's a lot of negativity, so you feel like you kind of are very hesitant. And lots of times the technical levels, which you should be paying attention to, work out fine. And I see them, and I'm able to spot them very quickly and take them. When we take them, they work out great, and usually the lows of the session. So this is a rally call to all traders out there who really want to trade intraday. That's where the money is to be made each day. The buying and holding is great, especially at certain times when the market's rallying and stuff, and you get into like NVIDIA or some big stocks, you can make a lot of money. But we're going to concentrate on making consistent money and what I call daily income. But trading the futures. And this is just a little, like I said, a little intro. Head over to Day Trading Radio, the YouTube channel. A lot of people are probably seeing this on other channels, but head over to Day Trading Radio on YouTube. Subscribe. That way you get the updates of when I go on live and I'm trading these lives. You can follow along and trade along with me. But that's the first important thing, and I believe that is pretty easy. That's Day Trading Radio. That's what it looks like, broadcasting live. That's myself on one of the videos. But there's tons and tons of videos, lots of education. I would recommend starting off with a playlist and go to the 7-day crash course, which is a really good playlist and stuff like that. So we have, I have a lot of different things on here. There's thousands of videos. All right. So we'll just head over there. Don't forget to whatever you have to do, join or subscribe, stuff like that. All right, so the purpose of this video, not to make it too long, not to bore the crap out of you, just to kind of get the concept of what we're going to be doing more. Concentrate on the most consistent money-making trades of the day, and I break these down. I'm a divergence trader, long and short, 1 minute, 3 minute, 5 minute, 60 minute, and daily time frames. We're going to concentrate on the 1 minute and the 5 minute, possibly the 60 minute. And of course, I continue to bring you the swing setups. I'm not going to stop doing the HPS stuff. And HPS, which means high probability setups, are based off, our indicators, and we'll go over that in a second. So that's the number one trade, and I'm hunting that. And I consider myself, kind of like a stock hunter, just waiting for these to set up. Until then, you have to tame yourself, your inner demons, the discipline and the patience. Because lots of times you'll get into the market out of boredom or just excitement or feeling FOMO. stuff like this. And that's probably, you want to be a business. And that's one of my biggest webinars that I did, and that can be found on the YouTube channel. It's how to run trading as a business. And that's important because that gives you a business handbook. And this is part of my business handbook, actually. What you're seeing right now is part of my business. I'm always adding to it because the rules, all these rules are part of the business handbook. Everything has to be identified. Everything has to be written out, explained, definitions for everything. There's no gray area. I want to be able to know what I'm getting in and getting out. It is a business. There's no gambling here. All right? The triple stochastic flag setup, these two go hand in hand, especially in a very trendy day. So this is a really high probability setup too, and I teach that a lot. And then oversold stochastic channel line bounces. This is basically channel trades being oversold and overbought. But the top two are the ones we're really going to concentrate on. Now, of course, the disclaimer, it has to be said. Trading's risky. You don't trade with money you can't afford to lose. You may lose everything. You could get caught in markets that you can't be prepared. Technical analysis doesn't work when you get hit with a black swan event or a news item. So things could be dicey. So you have to always remember that. And that's just being said. I need to do that. Trading is hard because we think too much. To have any chance of success, you must constantly apply and follow a set of rules. This will eliminate the opportunity to think too much. I should put JK there for me. I came up with that one. That's the disclaimer. Let's go to the next one. So then define your goals, all right? And I'll just go over a couple of the goals here. Monthly goals, very hard to do, all right? I don't believe in goals other than I like carrots, I like rewards and stuff like that, but goals, very tough because it forces you sometimes to trade not when it's the optimal time, when you don't have a setup, but you're always like, oh, I want to make $200 today. I only made $100. I better get a couple more trades in. That totally goes against what I believe in. Yearly. With that said, my goal is to take every qualified trade as defined in my plan. And again, as you notice, a lot of the things I'm mentioning here is a plan, business plan and stuff. Long term, making money means nothing if you don't stay healthy. Exercise your body too. So that's important. I mean, long term, our health is most important. This could stress you out. Make sure you stay healthy. With that said, in the purpose of the daily future scalping, I broke this down today, and people were asking me, well, how do you want to do this? Well, this is just the basic minimum amount that I would recommend. And from that point on, you could scale up or down. But this is kind of what I'm showing during the day in what I'm doing live. I'm using the MES, which is the micro contract, and I'll probably have other videos on that, but you could substitute that with the ES. You could substitute with the NASDAQ micro or the NASDAQ mini, the Dow futures, and these are futures trading. And for those out there who are not familiar with what I'm saying, you have to start somewhere. Believe me, this is the right place to start. Just because you might not know this, don't get intimidated. It'll take you a few days to catch up. Just feel free to reach out to me saying, I'm not familiar with this. Where can I start? And I could give you some really good beginner videos. So it's important that reach out, leave a comment, and say, hey, I just don't know enough, but I need to know more. Where do I start? And that's easy enough because I've taught thousands of people. But using the MES, 2 to 5 contracts per trade, and that's very small. Again, this is the minimum. MES, the micro contracts, is pretty much using $50 on margin. If you have a good discount broker, it's costing you $50 per contract. So in reality here, you're doing like $100 to $250 in the just putting up that much. That's not a lot of money to be putting up. And these trades will give you almost double that. So on average, I'll get 2 to 10 points while scaling out. So it's important to have multiple contracts. That way you can take advantage of the bigger runs, but you can take profits on the way up and protect yourself by having a trailing stop. So we want to always take profits off and let it run, takes profits off and let it off. And again, depending on how many contracts, you could adjust that. And again, once you start taking it off, sometimes I'll take some profits on the first rotation of the stochastics. It might have only given me 2 points. Maybe it's given me 1.5 points. But I have to have the discipline to remove it there I can't be playing games. I can't be testing and changing the rules mid-thing. So the first profit comes off as a set level. The second profit comes off, or we just followed up with a trailing stop. I like to do. So usually when my first target is hit, the contracts, how many contracts I have to sell there, come off, and a break-even stop comes back right up to where the trade began. So it has a break even, so we can't lose any money on the trade. And if it continues to move up, it'll follow it up by a set amount of points, ticks, depending on what we want to and that's the tricky part. There's no set number, because the market sometimes will be flat or won't be moving, and it won't give you a lot of upside. Right now, at this time of the trading, we're seeing big moves on these contracts. 10-point swings are just pivot moves. One from move up to move down to move up. These are 10-point moves. You catch the majority of those trades, or at least to get a couple of them, you have a nice trade going on there. My experience with this type of trading, you could average 20. I always call it a $20 trade. I see a good divergence. I'll get in there with a couple contracts. It'll hit $20. I'll take it off. And it's no pressure, no stress. I see it's a high probability trade. I take it 1, 2, 3. There's no real downside risk. And it's like, would you pick up a $20 bill if you were walking down the street? Well, during the day when I'm broadcasting live and explaining the markets and teaching live on the show, I'm doing this from 8 o'clock to 4 o'clock straight on, identifying all these setups. So it's easy for everyone to just get on board. You will see that, and I explain it. So that's the best approach. And again, trading for 23 years now, no more, 96. I don't even know this. I think I wrote this part of that in one of my articles that I put out. But I think I'm over 25 years now, 26 years. So I come up with the high probability setup methodology, and that consists of areas that are called HPS zones, and they're convergence of indicators, which give us a directional move in a signal where the signal is generated. That gives us a directional move in that direction. Very, very great way of trading. So I am happy to teach this. And like I said, it all begins with the business plan. The business plan is something I think all of us traders need to define for each other. For you guys, you have to define your own business plan. Definite set of rules. All right, you need an order entry, profit exit criteria, automatic stop. What is the risk management for the method? How and when to increase the position size? How to set up your charts, etc., etc. Starting balance. Again, it could be relative, how much money you have. If you're a beginner trader, I highly recommend this way of trading because it doesn't take that much to start. And there's no day trading rule, which is big for people who are stuck, just don't have enough money, under 25K, and you can't really effectively trade or get in and out of things enough to take advantage of other things. You miss so many trades under that pattern day trading rule. Trading futures, you don't have that. You could trade as much as you want. You will never be halted unless you, of course, don't have the money. So this is my thing. And each one of these things is broken down into this webinar. And I do the webinar for you. Like I said, the webinar is on Day Trading Radio YouTube channel. So go over there. It's right there because I already did it. It's about another 40 minutes long, and I don't want to redo it again, but I want to just go over some of the things that you're going to learn. The methodology is based basically off of these set of indicators here: support and resistance, recognizable patterns, trends and trend lines, but the stochastics are the big ones, and there's multiple things that you can learn with stochastics. So that's just what we're going to learn, and developed by George Lane in the 1950s. Stochastics is an amazing oscillator. It's an oscillator, an indicator for us traders, but it's a reactive. It's a proactive, not a reactive indicator. I mean, a lot of indicators you might be using are giving you a signal after the price is already, triggered. This one will start giving you a signal before the price starts to move in that direction. So you're in the trade even before. That's the key. That is the key. And for those out there who know who I am and watch the show, I mean, you know how good this is. It's extremely exciting to see these setups and the way they move. It's just like, that's probably why I don't get enough sleep at night, because I'm waiting for the next day to start. So you're going to learn the divergences. You're going to learn why divergence is, the angles and the science behind it. And then, here's the divergence broken down for you. Optimal, again, stage 1 of the divergence should have stochastics under 20. The low should bring that low should bounce and bring the stochastics back above 20. So here's your first low, and the stochastics are under this 20 line here. If you could see that down there. And then when the market bounces, stochastics bounce too. And the market comes back and takes out this previous low, but the stochastics hold above the previous low and preferably hold above the 20 line. That is our divergence. That's where we're going to get out. 9 times out of 10, we're going to break out of the downward trend that we're in. That's good odds. That is great odds, right? Those odds so good that, I sometimes use a poker analogy for trading, meaning I don't like to, some ways it is gambling because we're not in control of anything. There could be news out at any point, so there is a gamble there. But what we could learn from poker and stuff is, for you to win, you have to have a good hand that beats everyone else, right? But you have to bet it when you have a good hand. And that's what the high probability, that's what these setups are. When the setup comes along, you have to step up and you have to take it. Not taking it is just killing you. So I've broken this down into the best way possible to really just identify this to you, what it's going to give you, what you need to line up with the regular divergence. This is new rules of the trade. I'm adding this to the new updated webinar because this is just to make it even easier. What a regular divergence, the reversal candle, trend line, and time of day. All right, and then the 5-minute stochastics rotating. So I've broken down the divergence setups into 1-star, 2-star, and 3-star. So during the day, I might say, well, this is a 3-star divergence. If it's a 3-star divergence, it means that 3 of the 4 indicators that are lined up has a great chance of actually running really far. So you probably want to take a bigger position in 3-star divergences versus a 1-star divergence. So that's why I did that, because it even helps me. I said, all right, 3-star divergence. I might want to just, I want to take a big position into this. This is like something I wait all day for, and sometimes all week. So I want to be able to understand that, have that written out. For me, it helps. Hopefully it helps you. 1-star divergence, and then I tell you, I have to define everything. So if we're dealing with 2 MESs, 3 MESs, or 5 MESs, contracts, if you have a 1-star divergence, 2-star divergence, or a 3-star divergence. So if it was a 1-star divergence, I would only take 2 contracts. If it was a 2-star divergence, I'll take 3 contracts. If it's a 3-star divergence, I'll take 5 contracts. I'll take the first 2 off on the stochastic rotation to 80. Again, everything is just defined here for you. Or fail, that means if it crossed over before we get to that 80 level. Your second move to break even. Boom. Original stop is placed on the second stage divergence low. And again, that's whenever you have a divergence, that second part of the divergence where you put that stop, and that's what you're gonna do. So this is very exciting. I want to leave it off there. I'm going to let everyone else follow up. If you like to follow up, there's a lot of great information. I even have some calculators you could get over on the channel, which helps you put you. Or you know what? You could probably have to reach out and ask me, and I have it. Actually, you know what this is? This is at what's the group? Facebook groups for Day Trading Radio. If you have Facebook, go to Facebook groups. And do a search for Day Trading Radio, 3 separate words, and then just click on join that. And there's some files, and I have the calculator and stuff in that. So it gives you, you're able to adjust it. It really tells you what your risk is and stuff. It's really good stuff. And this video is over on the site. And don't forget to check out DayTradingRadio.com. That's the main site. We have a beautiful membership over there. We have hundreds of traders in our chat rooms. have multiple indicators that everyone gets to use, real-time alerts, squawk, news, music channels. It is the most it's the coolest site out there for traders. So check it out if you want. DayTradingRadio.com, or head over to the YouTube channel. You can watch the show there each day, and we'll see you in the markets. This is DayTraderRockStar for Day Trading Radio, signing out.